It's time for Let's Get Real with your host from Bob Richards and Associates, Bob Richards.
Hey everybody, how you doing?
Michael, how are you?
Well, I'm doing great. My name's Michael Mullenhour. I'm sitting here with our good friend, Mr. Bob Richards from Bob Richards and Associates. And who's this other guy?
You know,
lucky guy.
I have got a great guest with us today by the name of Josh Brown. Josh is a local mortgage lender here, one of the best in the business. Of course, that's why I brought him here.
And what's the name of Josh's place?
Josh?
I am at Mortgage HQ, local brokerage, and very excited to be here. Thank you.
Catchy name.
It is.
Yeah.
Right here in the delightful town of St. George.
Yes, sir.
Yep.
And Josh, do you cover all the areas of southern Utah around here?
Yes. Yep. Everywhere across the state.
Terrific.
Yeah.
Well, Bob,
Yes, sir.
I think it's great that you brought the other guy, Josh, to the podcast today, because this is going to be such a big help, because a lot of people have been asking me. They come up to me and they go, Michael, we see you and Bob hanging out at the Olive Garden all the time.
All the time.
But, we've been wondering, I'm self-employed. Is it hard for me to get a mortgage loan to buy a new house? And I guess that's why you brought Josh today.
It is. This is such a big topic these days, Michael. And in the past years, and really anytime a mortgage is wanted by a self-employed individual, it is not as easy as somebody who's on a salary or on a W-2 hourly wage. And so Josh is an expert knowing how to tell people, if you're self-employed, this is what I need. We can get you into a house. So Josh Brown.
So Josh, is it harder for a self-employed person to get a loan? And if so, why?
It's a great question. This is one of my favorite myths to debunk, to really dive into. To answer the question, yes, it is a little harder, but not as tricky or as complicated as many people might think. A lot of times it's as simple as making sure you have your ducks in a row, having your documents collected, and everything ready to submit all at once.
So what kind of documents am I going to need?
So you're looking at, depending on how you have your business set up, personal tax returns, that's the Form 1040, and your business tax returns, that's most commonly your Form 1120. Something very easy to get right from your CPA. It's one of the things that I always recommend is connecting your lender actually with your CPA and making sure we can connect or collect all of those documents.
So is there a minimum number of years that I need to have been self-employed before I can even try this?
Yep, there sure is. This is a pretty hard line. You're looking at 2 years minimum when you're self-employed, mainly because the golden rule when you're looking to qualify as a self-employed borrower is that the history of your business is what the lender is using to predict what the future might look like. So looking for a 2-year history in order to start using self-employed income.
So Bob, when somebody comes in and they say, Bob, I really want to buy that $4 million house that I saw in the Parade of Homes, which is coming up when? February
It is
something?
February 17th through the 26th. So just right around the corner.
I understand you're going to be out there.
You know what? I will actually, for anybody that listens to this podcast and are very interested in tickets, give me a call, shoot me an email, send me a text.
What's your phone number?
2 free, 435-688-8824.
So if I call, you'll give me 2 free tickets?
You know what? I will.
I'm going to be
2
there.
free.
2?
Absolutely.
All right. That's the Parade of Homes. So, Bob, as you get a lot of self-employed guys, like me, for example, who want to buy that $4 million house on the Parade of Homes. So I'm going to need to bring all the forms that Josh was telling me about.
Yes, you will.
When you see a guy like me walking in and I look fairly decent, and you hear say, "Well, I'm self-employed." Does your heart hit the floor and you go, "Oh my gosh"?
No, I'm excited for them, Michael, because they're the ones that are typically kind of put to the side, where other people are just like, "Yeah, good luck with that. I'm not really interested in helping you. It takes too long. You're kind of cramping my style." I invite them and say, you know what, we have got a program for you. Follow the rules, talk to Josh. We'll get you into a home. It's just a matter of getting things done in an orderly way. If people are ready to do that and are confident in being able to do things in an organized, orderly way, we can get them into a house for sure.
So what can I do as a prospective self-employed home buyer to make the whole process easier for both of you guys?
Josh?
It's a great question. So first off, I recommend, might sound a little bit basic, but for sure having separate business bank accounts aside from your personal bank accounts, separate business credit cards aside from your personal credit cards, and making sure those things are separated. So you want to, that's a little bit of step one, getting your business set up right. Definitely something your accountant could help you, get set up correctly. But that's really the very beginning, is making sure, everything's separated and filed on time to build up that 2-year history.
So basically, what you're telling me, it's good to have a wife that knows how to do all that stuff, because I don't know how to do anything.
Yeah.
Wife
that's the truth.
CPA.
Yeah.
Yeah, wife CPA. That's kind of the same thing.
Keep you in line for sure.
That's exactly right. So if I don't have a CPA, it's going to be a little bit more difficult, because basically they've got all the paperwork that you guys need as a lender.
It can make the process a lot easier, a lot more simple to gather those documents together. But there's nothing wrong with someone who decides to file their own taxes and prepare those documents themselves. So it might take you a little bit, a little more time than someone who's on a salary or paid hourly.
Sure.
Usually they're just looking for pay stubs and W-2s, whereas someone who's self-employed is going to need the full tax returns. And there are some situations, if you're looking for a jumbo loan, that's a bigger loan amount, you need a profit and loss statement. It's just to help verify that the business is doing well through the current year.
What's the jumbo loan amount nowadays?
So you're above, here in Washington County, above $715,000 and change.
Wow.
Yep.
Not amazing.
It is, because, when I started years ago, a jumbo loan was like $200,000.
Yeah. It's moved. Yep.
One thing I was going to mention, Michael, that Josh does and that we find with a lot of self-employed people, it's a good correction time for that business owner to make sure that their business is good, that they've got their affairs in order, that things are filed properly, that there's an LLC, there's a partnership, there's whatever documentation to put their company back in order and make sure that they're not diverting one side or the other. It just gets them more organized and saying, wow, I need to change my business just a little bit, or I need to tweak this, I need to add this, I need to get rid of this. It's a great compliment for the self-employed person.
Yeah,
For sure.
So I have a question. You mentioned something interesting about LLCs or corporations. Mm-hmm. Is one better than the other when it comes to qualifying for a home loan? Is it better to have an LLC or an INC, or just Michael or any particular corporation that has sway over the other?
So not necessarily, I would say. You could have a partnership. You could have something where you just have a piece of ownership in a business. I know this can vary a bit, from state to state too, but that is also a conversation I'd recommend having with the CPA directly. Mm-hmm. With your accountant, they can help you, based on the industry that you're in, any legal protections you might have. That's definitely a question they could help direct you on.
One of the things that I've noticed with partnerships is that you've got to have both partners. And so if you're the borrower and your partner obviously is not a borrower, but you're providing documentation from both parties in that business. And so sometimes the LLC or the INC is maybe a better way to go, because it's a much broader entity rather than necessarily what you might consider two individuals as a partnership. Now, that's not always the case. There's sometimes 3, 4, 5 partners. Yeah. That even gets a little bit more complicated.
Well, what about like an S Corp versus a C Corp or something like that?
Yeah, pretty much the same. Not a lot of variables with that, Josh?
Agreed.
Yeah.
Okay.
I think it can come down to the industry you're in and maybe some legal protections that one may provide over the other.
Yeah.
So, as you may remember, the last couple of years have been a little strange.
Indeed.
Oh boy.
We had this thing, what was it called? COVID something or other, 19. Has that done anything to maybe change the qualification requirements for self-employed
Good question.
folks?
Yes. So yes, we thankfully are largely on the other side of that now, but it caused a real train wreck in mortgage lending for a little while there.
How come?
When you compare being self-employed to someone who's maybe paid hourly or salary, it's very easy to identify, hey, are they still working? Is the business they're working for, are they doing okay? Is the income likely to continue? It's very easy to verify if you're on a salary or paid hourly. But if you were in an industry that was negatively impacted by COVID, or ran your own company, it was a little harder for a lender to verify that, hey, are you being negatively impacted by COVID or not? Is the business going to be okay through this? And it required, quite a bit more documentation to verify that, hey, we're doing okay through COVID or not, and being able to qualify after that. So they were looking through a profit and loss statement and bank statements and doing some additional verifications even after closing sometimes to verify that everything was still okay.
Has that eased up now?
Yes. So largely through 2022 and now here beginning of 2023, we're largely past that. There are, again, maybe some jumbo loans or something where you might need some additional documentation like that. But largely, once you have your tax returns at this point, that's going to get you across the bridge.
Wow. Well, I'm glad that's easing up.
One thing too, Michael, is those that are working from home now, working remotely is what these companies are now offering to employees rather than saying, hey, come back to the office. You need to come back to the office. There's many corporations that you got to show up. There's Elon Musk. You've probably heard of him. He requires his people to show up, and this work from home thing just does not fly. And so when you're working from home or working remotely, how do you track your hours if nobody's there to make sure the HR, or the boss, or the supervisor? So that can sometimes bring a little bit of question of, are you putting in, the adequate amount of hours for qualification?
That's a good point. What I do when I work with my clients, since I'm a self-employed guy and I track my hours, I have a software program that I plug in every single time I clock in, and I log exactly what I've done or am doing, and then when I'm done, I literally clock out. So it's like a digital stopwatch type of a thing. That's how I do it. So all of my hours are tracked. So if a lender, if you guys wanted to see or track what I'm actually doing, I could just give you that spreadsheet that has all my clients and everything.
That'd be impressive.
I know. That would.
Wow.
I like that.
Wow, I did something right.
You did good. You did good. I'm going to have to call your wife and let her know.
Michael did something right.
That's for sure.
That's incredible. Hey, so Bob, I need to ask you this. I know you've been in this business a long time.
A little while, yes.
A little while. So because I'm a self-employed guy, I'm going to ask you first, and then I'm going to ask the other guy,
okay.
Josh. So if I'm a self-employed guy, does that determine what I'm going to pay in my interest rate? Do I pay a higher rate because I'm self-employed?
We are, because I'm self-employed as well, Michael. We are under the gun a little bit and scrutinized a little bit more than the W-2 or the salaried person. We're maybe a little bit more of a riskier borrower because we are self-employed. If we decided to go out of business tomorrow, well, we go out of business tomorrow. If we wanted to stay in a W-2 or salaried position, we stay at work, or we find another job where we get paid an hourly or salary position. So again, from a self-employed, it can have a little bit of an increase or a little bit of a bump to your interest rate. A lot of it's credit score, a lot of it's history in the business. 30 years for myself, others that are 3 or 5 years. Maybe there's a little bit of a difference. Josh, what do you think?
Yep, I think Bob's spot on. I think the pieces or the factors that you mentioned: credit score, your down payment. The kind of loan that you're looking at, those items definitely have a bigger impact than whether you're just self-employed or not. I feel like being self-employed, as you go through and calculate, the income that we're allowed to use, not any income that's been written off or
under the
any
table
deductions, that feels more like of a yes or a no. Whereas a credit score is going to be on a range, a down payment is going to be on a range. And those items are going to have a bigger impact than, self-employed or not.
Okay. So I'm hearing a lot of stuff around town over at the Olive Garden.
Yes. Yes.
Yep. One of the best.
So I hear this stuff about a 2-1 buy down. What the heck is that? And how's it used? And what's the benefit to me?
They're great. They are great and very popular right now. A 2-1 buy down is something you usually see on someone who's got a home for sale, where the seller is willing to help contribute a seller concession or a seller credit to help buy the interest rate down. So you can do a 2-1 buy down, 1-1 buy down, not to get into too many technical terms, but it's where the seller helps pay, pay to lower your interest rate for the first 1 year, 2 years, sometimes 3 years. So let's say if you're starting with a 5.5% interest rate, it could be at 3.5 for the first year, 4.5 for the second year, and then 5.5 every year after that. So
would that be a 2-1 buy down or a 3-1 buy down?
Yeah, even one lower if you went with a 3-1.
Really?
So it's a great way for someone who, if we think that interest rates are moving lower, which everything that I'm seeing is pointing to that, moving into the future, inflation is looking a lot better. Mm-hmm. And if you think, rates are going to be lower in the future, it's a great tool to help make the home affordable now. And, down the road, if and when rates do move lower, like we think they will, then you could refinance and kind of make that permanent at that point.
So could I do a 2-1 buy down with an ARM?
I believe that you can. I don't think they're quite as popular as just your traditional 30-year fix. That's the product probably best designed for it, but definitely not off the table.
A little bit more expensive too, Michael, with that ARM to be able to get that, because you're kind of getting the discount on the 2 to the 1, and then you do an adjustable. And these companies are out to make money on where we pay our mortgage, and they're taking a service fee every month. So yeah, it can be a little bit more costly where they're saying, oh, that affects our bottom line a little too much. So we have to maybe raise our fees a little bit.
Okay, that makes sense. So, well, I understand we all need to make a little money in there.
Sure.
So it's a profit deal.
So goes.
That's right. That would be in the black instead of in the red. Yeah.
So answer me this, riddle me this, either Bob or Josh. So what's the difference between a pre-approval and a pre-qualification, and how's it going to benefit me as the buyer?
Night and day. Pre-qualification is just that. The lender kind of thinks that you might be able to kind of sort of buy. A pre-approval says, go buy a house, we'll see it closing. It's literally that kind of security that they've got, that kind of confidence in that borrower, short of them doing some silly things towards the end, like buying furniture before they buy the house. That's no good. Josh, tell us a little bit more about that.
Yep, you're spot on, Bob. So pre-qualification is just where, maybe a loan officer like myself goes through the file, and I, not to toot my own horn too much, but do a good job at that initial pre-qualification. You review pay stubs, tax returns, etc. But I'm not the one that makes the decision on the loan. I'm not the one that gives it the final stamp of approval and says, hey, you're good to go. Let's go ahead and move to closing. An underwriter at a mortgage lenders who makes that decision, they've put in hundreds, if not thousands of hours to do this correctly. And when you have a full pre-approval done, it's because an underwriter has reviewed that file. They've looked at the pay stubs. They've looked at the bank statements, the tax returns, et cetera. And they're giving you the stamp of approval saying, hey, unless there's an issue on the appraisal or the title work, maybe there's something that comes back that's a little odd, you're good to go. You're fully pre-approved and ready to close.
So the process then is after the application has been submitted with all the paperwork.
Yep.
That's when it goes to the underwriter, and you're kind of out of it then, and it's up to the underwriter.
Yep. I get it stacked real nice, put it in a nice pretty box with a bow on top. Include a nice cover story so the underwriter knows that, hey, Mr. and Mrs. Jones, this is what they're looking to do. This is how we have the income set up, and then it's off to the underwriter and the lender to approve and move forward.
So what about if they've had a couple of credit dings? The last couple of years have been kind of weird. Yeah. Some people got a little, wonky with their income and stuff like that. Mm-hmm. Do you write a letter to explain to the underwriter this is what's going on? And does that actually do any good?
For sure, it does. You have to recognize that the underwriter is just another person at work on Monday, Tuesday. They're a real person, and they want to understand what's happened. So. Depending on the severity of that credit ding, there's a lot of times we can get that fixed right away. If it's something that's going to take a little bit longer, then we can get a plan together and get that get a plan together for down the road.
As a self-employed buyer, are there any restrictions as to what type of loan I can have? Can I still get a conventional FHA, VA,
Great question.
All that kind of stuff?
Absolutely, yeah. There's no restrictions there.
All right.
So. Doors are open. Yep.
Yeah. The doors are open.
Let's
walk through. Yes.
Yeah.
It's just a myth. I feel like so many people are really concerned that, hey, if I'm self-employed, I'm not eligible, I'm not qualified, and it's just not true.
Not true.
Yes, as I've talked to Bob about this on several occasions, I find that if somebody who is self-employed and is really interested in getting into a new home, that between like the two of you guys, between a good realtor and a good lender, there is a way to make this thing happen, especially with things like a 2-1 buy down and all these other things. And I know there's a lot of builders that are giving remarkable incentives this time of year, so that's good too.
Very true.
So before we sign off, what last minute bits of advice can you give our listeners who are self-employed to help them buy a home, Bob?
Folks, don't be discouraged. Pursue it. It's worth it. If it feel like that you're giving a DNA sample, a blood sample, you probably are, but it's worth it. Go see Josh. He's the best in the business here locally in St. George, Utah. And he will take care of you, I'll handhold you to make sure that you're able to get into a home that you're absolutely going to work for and love once you've made the purchase and closed on it. That's what it's all about.
That's great. So, Bob, if somebody wants to get a hold of you, what is your phone number? How can they find you?
Best way to reach me, 435-688-UTAH. That's 435-688-8824.
That was great.
Not bad.
That was very professional.
Thank you.
What about the other guy, Josh? How can somebody get a hold of you?
Well, first steps, I say reach out to Bob. No, we make a great team, and I appreciate the opportunity again being here. But best way to reach me is just online. My website's mymortgagehq.com. Phone number is 435-216-9494.
Great. Gentlemen, thank you for being here today.
Thank you.
Very informative. And we will see you guys again next time with another exciting episode of Let's Get Real with your host, Bob Richards.
This has been Let's Get Real with Bob Richards from Bob Richards and Associates. For more information, buyutah.com. We invite you to return again for another edition of Let's Get Real with Bob Richards from Bob Richards and Associates. This has been a production of 1-to-1 Network.